Good evening, everyone. Thank you for joining our webinar on successful business models for livery yards. My name's Kath. I've worked at SCIB for over 17 years. Started working SCIB after I completed a degree in equine science. Before that, I've worked in yards and I've been been involved in horses all my life. Just taking a bit of a back seat now. I've got young children. But during my time at SCIB, I've always worked on the equestrian business side, dealing with riding schools and livery yard insurances. So hopefully I'll be able to answer a few bits about the equestrian business insurance tonight. Hopefully you're all aware of who SCIB insurance brokers are, but in brief, we're an equestrian insurance specialist and we've been insuring all things horsey for over 60 years. This includes insurance for all types of yards and equestrian businesses, as well as horses, horse boxes and trailers. So now I'd like to very much welcome Cheryl and Kathryn, who will both introduce themselves and their business and expertise. Thanks, Cheryl.
Kath. So some of you may know me and some of you may not, so I'll give a quick introduction. I'm Cheryl Johns. I'm the owner and founder of LiveryList directory, which I launched in 2011, and also the Yard Owner Hub, which came out of a bit of a lockdown project in 2020. I'm a qualified yard owner, freelance groom. I had horses for many years, competed to a fairly intermediate level. So I kind of have experience from all areas. I put together the LiveryList, which is predominantly a livery yard directory, but off of the back of that, realizing that there were a lot of yard owners that didn't have anywhere to turn to for support, I have developed over time the Yard Owner Hub. So I work alongside charities, businesses and organisations across the UK to help develop resources and support for yard owners on all aspects of practical and administrative yard management, and to help them understand the industry and develop their services and products. And obviously through that, I work with thousands of yard owners every month to help support and develop and promote all aspects of their businesses. As part of that, I do a lot to help promote best practice and understanding standards in the industry and helping to increase value, which is why we put together webinars such as this one, so it helps everybody that is perhaps not so well versed in the business management side of things. I do run a dedicated Facebook group for yard owners, which has got over 3,000 members, and business planning and VAT and taxes is something that crops up quite a lot, especially at the moment, because obviously everybody's looking to try and reduce their outgoings where possible. So hence we came to where we are this evening, and we're also joined, as well as Kath from SCIB, we're joined by Catherine Chapman, who I shall let introduce herself.
Thank you, Cheryl, and good evening, everyone. I'm Catherine, and yes, for my sins, I'm both an accountant and a livery yard owner. I decided after 20 years of working for a top 10 accountancy firm that I would like to have Christmas again. So I decided to finish off being in tax and go and be a bookkeeper. Hence, Catherine's bookkeeping and admin services. However, living in a village, we know what village lives are like. I was asked, would I do somebody's tax return? Word got around, so it then changed to Catherine's bookkeeping and accountancy services. So in April 2020, together with my husband and my son, we took on a livery yard. An exceedingly long story, which I could fill the hour totally with various issues from staffing, legislation. It has been a very, very steep learning curve. So I'm really pleased that I could come and share my experience and knowledge with you all.
Thanks, Catherine. So hopefully this shall be informative, because obviously bookkeeping and tax and the like is not the most exciting of topics, but we've tried to put together as much information as we can into this hour. If you've got a pen and paper handy, then that's great. If you want to take down any notes, the webinar is being recorded, so Katie from SCIB will send a link through on a follow-up email, along with several resources and other links about other guidance that we might mention throughout. there is the possibility for a question and answer at the end. There's a chat facility for those that are familiar with Teams, just up on the top bar where it says chat. You can enter chats in a chat or question throughout the webinar, and where possible, I'll try and relate these as we're going along. And if there's anything that I think is particularly relative to what we've been discussing, or perhaps an area that we haven't covered, then I'll try to cover this at the end. I don't think if there are lots, we'll probably get round to everybody, but if anybody does want any extra information, either in more depth about what we detail this evening, or any other questions, perhaps individual circumstances, then there will also be all of our contact details on the follow-up email. You can see that Katie's just popped in, so everyone should have had a chat pop up to give you a little demo there. So right, let's get started. So Catherine, for the purpose of this, you'll notice we have two Cathryns. So Catherine from SEIB will be Kath, and Catherine, as in Catherine Chapman, will remain Catherine, just to save any confusion. So Catherine, when yard owners are looking for an accountant or bookkeeper, should everybody offer a similar service, or are they better to try to find somebody that specialises in the equestrian field? So typically, what does a yard owner need to be keeping their mind about when they're looking for an accountant or bookkeeper to help them with their business?
But I know the whole subject is a very dull subject because it's accounts and it's tax. But there are a lot of good bookkeepers and accountants in the industry. But there are several people who class themselves as bookkeepers and accountants, and unfortunately are not trained or do not have any experience. Unfortunately, anybody, Mrs. Blogs out in the street, can set themselves up as a bookkeeper and accountant. It is getting more regulated, so double check to make sure that somebody's qualified, or ask them. They should give you your first initial meeting free of charge, and then you can go and ask them what their experience is. Do they have any other clients who are livery yards or training yards? Also, for bookkeeping, it's relevant now to have software. All right, so again, to try and locate which is the accountant can help you with which program would be better suited to you. So there's a lot of them out there. We use CBA Services. We use Xero. It's very easy to use, but there is QuickBooks, there's Free Agent, to name but a few. Another important to me, I think, is that you should be able to feel at ease with your advisors. So that is whether it is your insurance broker, whether it all the way through to your accountant and bookkeeper, through to your HR company. You should be able to feel that you can pick up the phone or pop in and see them after making an appointment, because sometimes I find with my clients is that if they have a query, that small molehill will then turn into Mount Everest. But if they sort of manage to get it all sorted out in the beginning, then they are happy. Again, it depends what you want from your accountant or professionals. If you just want somebody just to do the compliance, so they're going to complete your accounts and your tax return, and you only speak to them once a year, that's fine. But in this day and age, with everything being as it is, it is always better to just be able to pick up the phone and sort of somebody to be able to help with a question that you have. So that could be to making sure somebody is up to date with the current legislation. So we've got, for example, Making Tax Digital coming in for sole traders from April 2026. This means that if your turnover, your income, exceeds £50,000, this will be reducing to 30,000 from April 2027 and 20,000 from April 28. You will need to file quarterly returns to HMRC using software. Similar to people who are VAT registered now, that on the return it will show your income less your expenses for that quarter and roughly what your tax liability will be. Now you can make, once you know what that is, you can actually make your payments to HMRC then after that quarter. So come to 31st of January each year, it is not a big shock that you have to find an amount of money just after Christmas.
Thank you. I didn't know that about the changes. That's useful. One thing I think that catches a lot of yard owners out is when you start talking about really businessy terms, because they're always like, I just run a livery yard, I don't need to know these things. But the phrases business model and tax planning come up quite a lot when it comes down to the real business end of things. So could you just explain what these are and how they can benefit yard owners when they're thinking about the future of their business?
So in this day and age, as I said beforehand, we've got increasing costs. So most people will look at the business, and if you're a yard owner now and you've been trading for several years, you will know what it's like, what your costs are going to be. But for starting out, you need to sit down and work out a business plan. Now, business plans take a long time to work out, but it is an important document that isn't filed away. You refer back to it monthly, quarterly, because it will change. Your business, you will set it up today and your business will change. My livery yard, when we set it up 4.5 years ago, we went full livery, staff, everything. We are now DIY, no staff, because as everybody will see on the livery yard chat, staff are the bane of our lives. So within the business plan, you will have your outlining how you're going to create your business, how you're going to deliver your service, and also how you're going to make your profit. Within that, you should actually have your income and expenses projection. So if you're a brand new business, like I was 4.5 years ago, I did a business plan. I did my projections, and if I look at that now, I know I'm DIY, but even when we were all full livery, it was totally different, because so we updated it as you go along, because the hay goes up. You know, you're going to change from straw. You then decide, no, straw, you can't have that because you can't get rid of the straw to the farmer because you haven't bought it from the farmer. So there's all of that to look into before you actually potentially say, yeah, okay, we're going to just go on a straw basis. Now, how are we going to get rid of the muck? And as your business grows and evolves, so should your business plan and your budgets and your cash flows change. So some of the things that you should include within your business plan is what makes your business stand out to your customers. So it is a cutthroat business. So your livery yard may have an indoor school, but the livery yard down the road doesn't. It's only got an outdoor school. So you can sort of advertise and potentially charge a bit more because you've got the indoor school. What specific groups of customers are you going to attract? Do you want just the happy hackers, or do you want the eventers, the competitions? Do you want the London people if you're down? So they can literally just come in, get tacked up, there's the horse, and off they go. What income revenue streams are you going to concentrate on? Now, that is an important thing, because by breaking down whether you're going to have what services you're going to do, you can actually look back and see if it is actually cost effective to do it. I'll come on in a minute with some other examples, but for example, if you decide you're going to say, I'm going to do some clipping. So with that clipping as a service, you then have to break it down within the cost. So you have to bath the horse before and afterwards. You then got the clipping. Then you've got to think about those clippers. They have electricity. You've got the wear and tear on them. So all of that has to come into your hourly rate or your cost of charging for the clipping service, which we don't always do. And bear in mind, you as a person, whether you're the yard manager or the livery owner, you also have to look at the minimum wage or the national living wage. And are you worth that? Well, personally, I think you're worth a bit more than that. So that is another thing that you have to include, whether you've got a staff member doing it or whether you're doing it, to include an amount for your salary, for your time. What expenses are you going to make to include within your income stream? So going back to the clipping, that will be your electricity, your water, your staff member, the shampoo. So all of that goes into the expense because you're generating the expense to get the income. Hopefully that makes sense. I'm sure Cheryl will tell me if it doesn't make sense, or Kath will do. Okay, but you also have to remember in your budget, your business plan, that you've still got the upkeep of all the buildings. And if you're going to do any capital projects, you're going to need to save for that. For example, if you're going to put an outdoor school or extend your outdoor school or get an indoor school, that also potentially needs to be included. Now, by completing the financial side of your business plan, it is very daunting. So if you feel comfortable, as I said, I went back to when you're looking at your getting your advisors, you've got to feel comfortable with them, that you can then go and ask them either to help you with it or if they can check it over once they're finished. So that is the business model. Okay. Turning to tax planning. Tax planning is very good. You look at what you're actually going to do. So let's take that you've made a huge profit, if there's profit in livery yards. If you're making a huge profit, you want to reduce your profit, whether you're a sole trader, limited company, a partnership, so you don't have to pay as much tax. So you can actually say to yourself, right, we need a new tractor, a new quad. So you could actually, once you've sort of had a look at just before your year end, have a chat with your accountant and say, we need a quad. Is it worth buying it this year or next year? Because an accountant, people say accountants are a luxury, but we are worth a weight in gold. We really are, because we can reduce, hopefully, your tax liability. And also we keep up to date with everything, which is another really important thing, as we was just talking about making tax digital. That is really important, and it's important to start now, looking forward, because we've only got less than 18 months and it will be upon us. Over to you, Cheryl. Was that a clear?
Yeah. Yeah, and also just to add in, where you're talking about the calculations and everything and the thoughts that people need to think about, on the hub we've got a really detailed calculation sheet, which a lot of yard owners find really helpful to print off, because I think it's about 4 A4 pages long, and it is kind of like a trigger for every cost that could possibly be thought of, right down to light bulbs and toilet rolls, that might be incurred. So obviously, in line with the information that you're giving, Catherine, then that should give people the tools that they need to be able to have a proper think about what costs that they incur through their yard, rather than just what might seem the obvious things like the stable and the maintenance and the hay and the straw. So you've just touched on whether yards are run as a sole trader or a limited company, and that's a question that crops up quite often for people that are either newly setting up a yard, or that are perhaps turning over more than they thought, or feeling that they could be in a better position for the way that they run their business. So would you just be able to run through the different business regimes that yard owners can consider when they're thinking of being a business? I know a lot of them are very private, but they all have an official business status, whether they like it or not.
So you can be, there's a number there. You can be a sole trader, you can be a limited company, you can be a partnership, and you can be a limited liability partnership. The ones that I'm going to talk about, which are more that people are, it will be a sole trader, and I'll go a limited company and a partnership. So I will go through the various different stages for you. Personally, and I put this in at the very beginning, I am, for my livery yard, I am a limited company, which at the end I'll explain why. Okay, so for a sole trader, that is somebody trading on their own. That individual can employ people. From an income tax point of view, the sole trader is assessed to income tax on the net profit made, whether you take it or not. National insurance contributions are required to be made, and this is either class 2 and class 4. So within your year-end package, you should have a profit and loss account. This will be showing your turnover that you've made for that period, together with the expenses incurred. There will also be a balance sheet which records the assets of the business less the liabilities. A sole trader will need to file their tax return before the 31st of January following the end of the tax year. It's very confusing. So what that means is, for the period 5th of April 2024, the current tax year that everybody's completing now, the return is required to be filed before 31st of January 2025. Depending on your overall income chargeable to income tax, as I said beforehand, you as a sole trader, you are assessed on your net profit, whether you've taken all that profit out of the business or not. So the tax rate will be 20%, 40%, or even 45%. And if you're a very successful livery yard and your net profit is over 100,000, between 100,000 and 125,000, you will pay tax at 60%, because effective rate at 60%, because you lose your personal allowances. Income tax and national insurance are required to be paid again before the 31st of January each year. However, if your liability exceeds £1,000 or 80% of your total tax liability, so in my case, I'm employed and I've got the livery yard, so it could be that 80% exceeds, payments on account are required to be made for the next tax year. So, by way of an example, for the year ended 5th of April 2024, my profit is 2,500. Sorry, my tax liability is 2,500. This will need to be paid together with the first payment on account for the following tax year, 5th of April 2025, of 1,250. So it's 50% of your total tax liability for the previous tax year. Meaning, which does catch a lot of people out, £3,750 is due to be paid by the 31st of January 2025. Then again, a second payment on account for the year is required to be paid by the 31st of July. Again, that would be 1,250. So where we were talking about your budget and your cash flow, that will actually also potentially should be put in there because you'll need to find that money. A partnership, so that is like everything that I've said as a sole trader, but there's two or more people who have joined into a partnership. So it could be spouses, it could be friends, it could be your next door neighbour. However, once a partnership has been formed, doesn't matter who it's with, it is recommended that a partnership deed is created. This document sets out the structure of the partnership. For example, who receives the profits, the losses, who puts in what for the partnership, who's doing what, if there's a salaried partner, and what happens when the partner leaves the partnership or dies. Because not very many people think about if one partner dies, what happens to their share. So again, with a partnership, within the accounts, there will be an income account, so it shows which partner is due what, and also on the balance sheet, they will show what the capital account is. So that is the main, the two over there. As I said at the very beginning, I am a limited company for my livery yard. It's a separate legal entity. A company has a shareholders and directors. The directors work for the shareholders, but usually within a smaller company, the directors are usually the shareholders. By trading through a company, there are a few other compliance requirements. For example, with Companies House. So you have to complete a confirmation statement. That is just confirming with Companies House that the structure hasn't changed. So you haven't changed directors, the shareholders are all still the same. So, and the directors have to comply with the Companies Act. So with that, that means to ensure that the company is trading solvent. This is where it is better to be a company, potentially a limited company. If the company is not trading solvent, under the Companies Act, the directors may lose the limited liability veil and be treated as if they were a sole trader, and their personal assets may be at risk if any liabilities are unable to be paid. By way of an example, I'm going to talk about insurance. Okay, so your insurance policy, so the insurance policy doesn't cover the insurance claim. The claimant would be able to apply to you personally for any shortfall. This would be the position if trading as a sole trader or as a partner. So by way of an example, the insurance policy was 5 million and the claim was for 6 million. You had a nice a horse and it damaged and whatever. So that was for 6 million. Trading as a sole trader or a partner in a partnership, the additional 1 million would be the sole trader partner responsibility, therefore settling the debt by your personal assets. That if you don't have those personal assets up to that amount, it could mean that you go bankrupt. So by trading through a limited company, as long as your balance sheet, so that's your assets less your liabilities, equals a positive or a negative. If it's in a positive, even by £1, the director can demonstrate that there was he wasn't negligent or anything like that, then the director's personal assets should remain safe, as the claimant should be only able to claim up to the assets of the company. Again, if that's just £1, that is all they can have, plus the assets of the business. Limited companies must prepare statutory accounts. These accounts are filed with HMRC and Companies House. Going back to the original thing, a limited company is a separate legal entity, and it's the accounts and things are with Companies House out in the open. The accounts will include the profit and loss account together with a balance sheet and notes to the accounts. That is for the directors and the shareholders. The notes provide additional details about the financial statements. So if your bank manager or the bank wants to see your full set of accounts, you should also take them the notes. For Companies House filing, it's just the basic profit and loss account and a balance sheet. For HMRC, you have a full set of accounts and a balance sheet. The accounts are required to be filed 9 months after the accounting period ends, and the corporation tax is due 12 months after the accounting period ends. The corporation tax rate for a company is 19% with profit less than 50,000. But if the profit is between 50,000 and 250,000, there's a lovely calculation which all accountants love, and it's under the marginal rate scheme, a marginal rate which and that would either be between 19 or 25%. Any profits above 250,000 will be assessed at 25%.
Excellent, thank you, Catherine. Excuse me. So obviously, like I've mentioned, I see lots of questions on our Facebook group, and just generally actually on Facebook and in yard owner discussions about problems that yard owners have experienced when it comes to their bookkeepers are not understanding things properly when it comes to tax and VAT. So what would you say are the most common errors that you see by yard owners when it comes to financial matters such as their bookkeeping or accounting?
So go back to what I said at the beginning. When you sort of setting up, or even now, it's better to work out what your basic livery charge is going to be. So with that, I mean mucking out, just general looking after the horse. So you would then put that in on your invoice as livery, and then any services that you do afterwards, if you're going to be holding for the vet, if you're going to be go back to the clipping, if you're going to be riding or training or schooling, you put that as a separate line, because for VAT purposes, which we'll touch on in a bit, that depending on if you've opted to tax on the building, again we'll come back onto that one, so hold that thought. The livery may be exempt from VAT. So that means by splitting that out, all of your extras have to get to £90,000 before you have to register for VAT. Does that make sense? So, as I said beforehand, we need to do a budget to make sure that your livery, so that includes the bedding, the stable, the electricity, the water, if you've got rubber matting in, anything to do with that stable and your livery. So if you've got staff, remember that you've got the employer's national insurance, you've got the employer's pension if you're doing it, that all needs to be broken down to include just the basic for livery. All right. So another area is not budgeting. Somebody said, one of my I had a yard manager, and she's turned around to me and she said, because I showed her my nice little spreadsheet, and she said, you cannot run a livery yard on a spreadsheet. Now, with the computer, with software, you don't have to complete the spreadsheet, because with Xero, you can put a budget in it, and then you can do a budget versus actual. But it is still important to do a budget, whether you do it handwritten or whether you're going to be doing it on a spreadsheet or on software. You've also got your cash flow. Now, many moons ago, you used to hear cash is king. We don't have physical cash in hand. That's a no-no, most definite no-no. But cash flow, you need, for example, if you just took down your profit and loss to work out your budget or your cash flow, that is good. But you, for example, if you have a loan, within your profit and loss, all there's going to be is just your interest, not the physical loan repayment, which you need to be in your cash flow. So if you've got £1,000 left in your bank account and you've got to pay your hay, but you also know that you've got your loan payment coming out of £350, £275 relates to the capital repayment and 75 relates to the interest. All that you're going to be seeing on your profit and loss is £75, not the full 350. So your cash flow is going to be short. So the other side of the flip coin is to do with bookkeeping. There are a number of issues with accounting codes. Okay, so we've spoken beforehand. You have your turnover. You then have your direct costs. So the direct costs mean what makes you get your income in. So for example, that would be feed, bedding, you'd be your labour. Then you have your admin costs at the bottom, which then comes down to your net profit, hopefully. So that will include, your admin costs will include your rent, your accounting fees, your insurance. So that is important, because otherwise when you look at your profit and loss account on your software, it's not going to make sense. Excuse me. If you put your direct costs, muddled them all up within your administration costs, because usually you need your gross profit margin to be above 50%. So then your net at the bottom you then got 50%, then hopefully you make a profit at the end. This is whether you are a limited company, whether you're a sole trader or a partnership, sorry. It is still the same layout. Does that make sense?
It's very detailed.
Sorry. Everybody
all
going to sleep yet? Is everybody still awake?
I think a lot of it as well, Catherine, must come down to obviously individual circumstance as well, won't it?
Yeah, it will do, but that is the main thing. Depending on what you're doing,
yeah,
you need to think for account codes where that actually lies, and that is where your accountant or your bookkeeper should be able to help.
Okay. So this is quite a popular thing that I see is, so like when so for people to join the Facebook group, or I get emailed questions about people that want support for their yard, and they always say, oh, I run a livery yard, but it's not a business. And I always just think, oh, you have no idea. So there's so many people that don't class themselves as a business when actually, even in fact, if they have a couple of spare stables in their garden that they're renting out and providing services to, in effect, they are a business to an extent. Or some people that perhaps only have friends or family as their liveries, and they feel that they perhaps don't need to declare the income that they earn from this or act as a business in any way. So perhaps they don't have their insurance, they don't have business rates, so on and so forth. What are the potential implications of this when it comes to sort of tax laws and so on?
I would always say you never know who that person is. If with any livery, or I've learned a lot about liveries, if you never know who they actually are, they could be a friend, and they turn around to their friend and say, whoever, and they could be an HMRC inspector, and if you haven't declared the income, they can actually find you. Now, I had a client, he's a gardener, and he went, somebody came up to him, he was cutting a hedge, and somebody came up to him and said, oh, what would you do it for cash? And he said, oh, if you hang on a second, I can just nip round with it, and that will be fine, it will be whatever. Oh, right, okay, can I have your name, please? And he was an HMRC inspector. His neighbour was an ex-HMRC inspector. So as I say, you never know. And also, if just be careful with friends and business, because friends, if your horse, if their horse got injured, for example, who will they come back to you? And then if there's a bit of unpleasantness and they leave, will they then turn around to HMRC on their helpline and say, I know this person, they're not declaring their income? If HMRC find and come knocking on your door, then with that, if they knock on your door, the interest and penalties are greater than if you notify HMRC. They can go back 4 years, or if they decide, if they wanted to and they think there's fraud, they can go back up to however many years they want to, 25 years. But by also not declaring the income, you may not be making your national insurance contributions. Now, people used to say national insurance was to cover the NHS and your benefits. It is really important to ensure that your national insurance contributions are kept up together if you want the maximum state pension. Because what HMRC do is make sure that you have, as it is at the moment, 30 years contributions. Now, it used to be 40 years contributions. Now, they can turn around and say that from the date that you retire, we're going to look back 30 years, we're going to look back 40 years. And if you haven't paid sufficient within those 40 years, then you won't get the maximum state pension. I'm unsure how old everybody is, and you may find that you're knee-high to a grasshopper, so that you won't get a state pension. But at the moment, hopefully we all will. And I must reiterate, you don't know who your liveries are, because some people do. They can shock you.
And just generally other annoying things as liveries. Right, we get to hear from Kath now. Hey.
Hello.
Yes, Kath, I expect that when it comes to business considerations, there are insurance considerations around this as well in relation to the business that you run and the activities that you cover.
Yeah, absolutely. And Catherine's already touched on that you don't know who, even with friends, you don't know how that they're going to react when something goes wrong. So anytime you have anybody on your premises and any horses, there's a liability exposure there. For public liability, this could be if someone's injured, So they even trip up onto on an uneven surface, or something falls off the roof. You could be held responsible for that. Or it could be that the horse escapes from the field, and that could fall back to you as the property owner. So your house insurance, for example, may cover that, may not. So it's important to check that out. But you potentially, if you've got liveries on site, third-party horses on your premises, you are going to need a livery yard insurance to properly protect you. And without that, if a claim was to come about and you didn't have the insurance in place, your assets could be at risk. So, if you're not a limited company, as Catherine was mentioning, you could be liable, and you could lose your house and things like that. So it doesn't seem worth it for the sake of a bit of livery yard insurance that would protect you in those situations.
Yeah, it's definitely, it's like anything. You always hear so many stories that you don't think anything happened to you until it actually does, and then it costs you more than perhaps an insurance policy or properly employing somebody or doing the maintenance. So we're just going to go back to VAT for a second. So a lot of talk is always about whether people should be VAT registered or not. Catherine, what are the pros and cons about being VAT registered that should help someone determine if it's right for them?
So you can get some benefits. You can voluntarily register for VAT. So with the pros, you can reclaim any VAT that you've paid. So going back to an example, you bought a quad, it's got VAT on it, you can reclaim that VAT. It also sometimes people outside look and say, if you're VAT registered, then you've got more credibility. So clients will say, because you have to do an extra level, so you're doing an extra level because you've got your VAT return to do. So clients may think you're more professional and potentially attracting more clients. Charging VAT on your services means that you can actually increase your cash flow. Whilst you must pay the VAT to HMRC, again, we go back to the cash flow, it's not due until the 7th day following your month. So at the moment, the 31st of October, VAT return will need to be filed and paid by the 7th of December, by the 7th of December. Okay, so the pitfalls of being VAT registered: increased admin burden. You must ensure to be able to reclaim the VAT back, you must hold a VAT receipt. Nowadays, with the software, you can just take a photo of it and it will upload. The VAT treatment of livery services can be complex for different things, which can lead to potential confusion and compliance issues. Whilst you collect the VAT, as I said beforehand, you must remember to pay it over, and that is the 7th of each month or the 7th following the quarter. I always recommend, if people are going to go VAT registered for a cash flow point of view, that you also do monthly VAT returns, not quarterly. Okay. Being VAT registered means you charge your VAT on all your services, which may increase your prices and you'll be not competitive in the market. And HMRC may inquire into the VAT returns, which adds more stress and potential financial implications to the business.
Okay. Excuse me. There was a question that came through on VAT, and it might be covered in what I'm going to ask you next, but if it doesn't, I'll touch on it at the end. So there's one thing I definitely see is what is VAT applicable and what is not VAT applicable, and how these are invoiced and how it's worded in contracts, and I always see so many different responses, and that their accountants told them this and somebody else on Facebook has said this. So it's like everything else accounting, it's very complicated and it's very detailed, but presumably a lot of how the VAT is treated is down to how people perhaps word their packages in their contracts, or how they split out their invoices or their income.
Yeah. So this is where it gets very confusing. All right. The main thing is that you have, so say your turnover's 100,000. And that is all just down to livery, DIY livery, 100,000. So some accountants will say, you're over the 90,000, you have to be VAT registered. However, if the premises, so say my livery yard, I don't get charged VAT on my rent because the premises hasn't been opted to tax. So my landlord, if they repaired a roof, they won't be able to reclaim the VAT back on that. So you look at your rental, or if you own the premises, have you opted to tax on the premises? If the answer is no, then the livery charge is exempt. So by that I mean, as I've said previously, if you are just looking after the horse, so you're mucking it, so the care is you're mucking it out, you are feeding it, you're turning it, bringing it in, turning it out, just the general looking after that horse, it is exempt. The premises haven't opted to tax, so you're fine. For the £100,000, you don't need to be VAT registered. Now, if the premises has opted to tax 100,000, unfortunately, you will need to be VAT registered because your turnover has gone over the 90,000. Okay, does that make sense? So let's go on the basis that the premises hasn't been opted to tax. So on your invoices, you will put livery, £150 a week, for example. You will then put out training, you then whatever else services you do, then you will need to put down to keep a record that those services, once they get to 90,000, you will then have to be VAT registered for your services. So if you get commission because you sold a horse, that is a service, so you will have to put it down and keep it separate to the basic livery. Okay, so your invoices, your contracts are really important to make sure it's all clear with it, because if you have an HMRC inspection, they will be looking down for this. Now, there are a lot of people who, you know, and this goes back to one of the questions beforehand, make sure that your accountant and your bookkeeper know what to do with livery yards. Okay. So have I missed anything? I don't think I have.
Question that's on that I'm just going to check that you'll cover this, but again, I think a lot of it is down to individual situations. Was if somebody's already registered for VAT,
yeah,
can they then separate their basic livery from their additional services. So, for example, they only declare for the purpose of VAT those that would be eligible for VAT rather than having to do it all.
As long as the premises aren't opted to tax, the first thing you need to look at is the premises opted to tax. To find that out, you look at your rent invoice, and if you don't get charged VAT on that, and if you've been gifted, for example, the livery yard, phone HMRC up, the VAT office, they should be able to tell you if a premises has been opted to tax or not. Okay, so if that is the case, that they haven't been opted to tax, yes, you can start doing your livery as one bit and then your extras as another. Now, you can deregister for VAT if you don't think you should be VAT registered. All right, so what we're also going to say is if you're VAT registered, okay, and you are claiming your exempt DIY over here, but you've got your services over this side, you're then going to have a nice partial exemption calculation to do, and you will need help from your bookkeeper or your accountant.
Okay, so yeah, that actually, Angela's just asked exactly what I was going to ask next. So you mentioned rented. If you own your property, where does that stand with knowing or the ability for it to be opted in or out for tax if you own the property?
So when you go and buy the property, if you bought the property and you had to pay VAT because it's a commercial property, that property would be opted to tax. But if you haven't, then you should be okay. But again, you can give there's a form that HMRC do to see if you are opted, if the premises has been opted to tax. Because if, say, it was 3 years ago and somebody opted to tax and they didn't do the due diligence on when you sell the property, okay, or they thinking that you're going to be doing it as a transfer of going concern, so no VAT is charged over because you would have just reclaimed the VAT, then that is another issue. So then if you phone HMRC up to find out if the property has been opted to tax, but if it's a private residential property, it won't be. It's mainly if it's commercial.
I never knew that. I think you might have just been like music to the ears of lots of people that run yards that realise that they might not even have to worry about that.
Well, and this is the problem. It's in, if anybody wants to look at the legislation, it's in the VAT notice 700. And it tells you about the livery yard. But the main thing is that it's only looking after that horse. Any grooming, any holding for the vet, any services should be taken out. So if your full livery and it's £850 per month, you need to split that £850 out between livery and the extra services that you are including within your full livery, if that makes sense.
Yes. Yeah. Okay. Right, we're going to move on to a different non-VAT topic now. So there's always lots of talk about employment things, especially with recruitment, which is notoriously terrible in the industry, retention, which is terrible, and the fact that the cost of employment is not only going up with things like the living wage and the minimum wage increasing rapidly, but also changes on various legislation. So, for example, even though it doesn't really exist, riding schools and yards, for example, can't have what's traditionally known as a working pupil anymore. It's a lot tighter now, all the legislation. When it comes to employment, what do business owners need to think about in terms of employment and paying their staff? There was a comment from Fiona that she said she was interested as an accountant that you've opted not to offer services so that you don't have to employ people, and if that is something that should be looked at, because obviously most yards offer services and that therefore requires them to employ people. So it's just what what yard owners need to be thinking about when it comes to employing people.
The first thing I would highly recommend is, if you employ people, locate an HR company to assist you. Again, you may think it's extra cost, but if I explain that, for example, what's coming in, that the business owner is responsible for preventing sexual harassment in the workplace. How can you, as a livery yard owner, can prevent that? So I personally have had, I've had maternity issues, I've had bullying issues, mental health issues. And if I hadn't had a good HR company behind me, the additional stress that it caused me and the cost, it just didn't outweigh itself. It was the other thing I would say, by getting an HR company involved, they're always up to date with the legislation. There's more legislation being changed going forward. So, for example, you can, whereas at the moment, if somebody is off sick, they've got to stay away, they suffer 4 days before you start paying statutory sick pay. From April next year, it goes on day 1, they get statutory sick pay. So if they've had a late night out the night before, and then they phone in and say, I'm sick, you have to pay them as it stands at the moment. An HR company will also go through employment contracts, staff handbooks, policies, slavery policy that you need as well. But one thing I would always say, never ever pay cash in hand. I'm sure Kath will say again, if you pay them cash in hand, your insurance policy won't cover it because there's no record of them being paid. Make sure that you've got an employment contract with them that is stating what your contract, you are telling them. So if then you can come down if they don't achieve it. So Cheryl mentioned earlier about national living wage. You need to ensure that the hours that the person does is within, you are paying the national living wage, because otherwise you can be paying them under the national living wage, and that's again penalties for you. So just to give you a bit of heads up, April 2025, it goes up to £12.21 for over 21s, and it will be £10 now for 18 to 20s. So we go back to what I said at the beginning. These amounts will need to go into your budget ready for next year, just in case you need to put your livery charges up. In addition to this, the employer's national insurance will be increasing to 15%. Depending on what your wage salary, your employer's national insurance totals, the employment allowance has increased to 10,500. Please remember that you're not only that, but you've still got your 3% of the gross salary for your auto enrolment, and again it is down to the employee to opt out, not for you to turn around to the employee and say, you don't want to do that, do you, Charlie? Because if you do that, you can actually also be receive penalties. If you say to your staff member, you can bring your horse in free of charge, that will be a benefit to the staff member, and you would potentially need to complete a form, what's called a form P11D. However, from April 2025, all benefits are required to be shown on the through the monthly payroll.
Okay. Applies to accommodation as well, doesn't it?
Yeah.
Yeah.
But accommodation can be exempt if you need somebody to stay on the yard. So it's for the purpose of their of the business, of their employment, that they have to stay on the yard. Because, for example, my yard, Toby, my son, stays up there because in our contract we have to have somebody on site all the time. So if that was an employee in there, then there wouldn't be a benefit.
Okay. Totally forgot what I was going to ask now.
Oh, sorry.
Yes, I wasn't going to ask anything. I was going to say, because you were saying about an HR company, another really good one for yard owners is the Equestrian Employers Association as well, because they do an annual membership and it's not very much money. I think it's £50, maybe slightly less. And they're obviously very up together with a lot of the legislation. They're a member of British Equestrian, and for people that don't want to go as far as the cost of an HR company, then that's a really good alternative, because they're really good at providing lots of advice. Stephen's asked, just because we're on this subject, I'm going to ask it. Stephen's asked a question: is it best to be employing staff on a self-employed basis? My answer to that is you can't employ staff on a self-employed basis.
No.
And that it's very technical, dependent upon lots of things.
Yeah, so you have to look at, HMRC will look at who determines the hours. If somebody does something wrong, in whose hours are they going to be doing it? Who's got the financial risk? So for all of that, if you need to look at the person, and if you turn around to them and say you've got to come in at 7 o'clock in the morning and you finish at 3 o'clock in the afternoon, you are dictating those hours to that person. If they do something wrong, so all the boxes were not mucked out properly to your standard, are they going to be doing it in their time? Now, if they're going to do it again between the 7 and the 3, 7 o'clock in the morning, 3 o'clock in the afternoon, they are doing it in your time because you are still paying them. Also, whose insurance are they under? Are they under your own insurance, or are they under their own? Are they under your insurance or their own insurance? Yes, it's sometimes good to not have an employee, but sometimes they actually give you, if they are an employee of yours, you get more, hopefully loyalty from them. But again, I had one subcontractor, and at one time I had 8 yard members, and yeah, they, sort of a person who is a freelance will come in now and again for holiday cover. That's obvious. They're not an employee. You can do the elephant test. So you stand outside, you look in, would you class that person as an employee? If they're wearing the same sort of t-shirt, uniform, or you can see that they're doing it, then the elephant test sometimes works.
Okay, well, perfectly timed was the insurance question about freelance screens, because I'm going over to Kath now. Kath, so when it comes down to employment, and employers' liability and such like, what is it that yard owners need to be considering when it comes to that area?
Yeah, so hopefully most people will be aware that by law you need to have employers' liability, and and that's to you as an employer, for anyone working for you if they're injured whilst carrying out duties on your behalf as employed duties. So, you know, simple example, part of their employed duties is to turn the horses out in the field, and whilst doing that they get injured. That injury, as they were doing it as part of their employed duties, could fall back to you as the employer. And EL insurance is required for those that you employ under a contract of service or apprenticeship, and the contract could be spoken, written, implied, and it doesn't matter if that person is self-employed. So, you know, going back to the self-employed question, we hear this a lot, saying, well, I don't need employer's liability because the person is self-employed who comes into my yard. But as Catherine was saying, if they're coming in regularly and they are working for your business, then you would need the employer's liability, and they would be covered under your yard insurance for public liability as well. So if they let go of the horse and it got out onto the road, that kind of thing, it would be whilst they were at your yard, it would fall under your insurance. So that it is really important to make sure that you've got employer's liability for anyone that's working for you. Probably the exception for that would be, as Catherine was saying, when you've got someone coming in very occasionally for holiday cover, in which case you could check that they've got their own public liability insurance, and in that situation you're not that they're not working regularly for you, then that's absolutely fine. So, and as an employer, you're required by law to protect your employees from harm. So you need to be providing safe conditions for those working for you. This includes, and it's a really important one, the wearing of PPE, personal protective equipment, which is suitable for the task they're carrying out. So basically, you either need to provide it or make sure that they are wearing it. And a lot of that will be down to your own risk assessments as to what PPE they need to be wearing, but, you know, suitable footwear, hard hats, whatever, depending on the activities and the kind that they're doing for you. So the risk assessments, as I just mentioned, they're really, really important. They both help prevent injuries, but they also, when we get claims come in, those yards that have got really solid risk assessments can actually really help us defend claims. So actually, you know, no one wants a claim made against them, and certainly a lot of the time we get, you know, yard owners saying, but I didn't do anything wrong, it was X, Y, and they did X, Y, and Z, and they shouldn't have done it. But if you've not got anything written down to say that that's how they should behave in that situation, when they turn out a horse, they need to be wearing hard hat, gloves, etc. They, you know, only turn out one at a time, whatever the sort of scenario might be. If you've not got that written down and you can't prove that you've articulated that to your employee, so generally that would be getting them to sign that they've had the training, then actually it's really, really hard to defend claims. So it's important, and a health and safety policy is required by law if you've got 5 or more employees. But actually a health and safety policy is really useful for everybody, for any number of employees. And we do actually, we've got a comprehensive risk management guide that we've put together, which covers a lot of this off. So if anyone's insured with SIB or wants any more information about that, that is something we can provide.
Okay, thanks, Kath. So going back to Catherine, as I've already mentioned, quite a lot of people keep or offer livery at their private yards, but you also have livery yards where people are using some of that for their private use. So it might be they've got a couple of stables for their own horses, they've got their own competition horses, their kids' ponies. So what do yard owners need to consider, or what difference does it make in terms of deductibility if yard owners are using a certain portion, or even the purchases as well, so consumables like hay and what have you, if some of that can be apportioned to personal use? Is there a way that that can make a difference when it comes to taxes and such like?
Yes, so if you have your own horse, so I've got small Phil, He's a Clydesdale, and we have him in a stable. He has chop straw, he has lots and lots of hay, so all of his expenses are disallowed. I used to sort of charge myself the rent because we're a limited company, just like a normal livery. But now we've all gone down DIY livery. It all I just pay for it, really, just as though he's in my, but the stable I disallow, and that goes into my director's loan account. So going back to, if you are a sole trader, what should happen is, say you've got a 5-box yard and 2 of those relate to your personal horses, you will have 2/5 are disallowed. So if you have the hay that you charge, you have the cost of the bedding, the feed, all of that relating to your horse should be disallowed. Whether you're a limited company, should go into your director's loan account, or you reimburse them, or it will go, if you're a sole trader or a partner, it will go into your it would just be taken out in your tax comp at the year end. Yeah.
Okay. So Kath, when it comes to people that are saying that they have private business, non-business livery yard businesses, what do they need to consider about insurances? Because obviously there's a big difference between if you're running a commercial business, even if it's a very small commercial business, and whether you're doing something privately for your own use.
Yeah, okay. I mean, are we talking about if you've got livery yard and your own private horses on the yard, or do you more mean if it's just that they've only got sort of a few of their own private horses?
It's just carrying on from what Kathryn was just saying about you know, covering the difference between personal and business insurances.
Yeah, okay. So yeah, I mean, what we often see, so in the scenario that I was just saying there, you've got your livery yard, and then you on the same premises you've got a few of your own private horses. That's quite normal. You're going to see that, and we quite often see people will say, well, I don't need my private horses covered under my business insurance. They're my own personal horses. You know, they're kept in those stables over there. I don't need them to be covered. But in that situation, there's you know, if you, even if you've got your own private liability insurance for those horses, it would generally fall back to your business insurance if they know that you've got business insurance in place. You need to be declaring all activities to your yard insurer. So, for example, you know, if there was a situation where all the horses got out all together onto a road and there was a big car accident, it would be very difficult to prove what insurer was responsible for what horses if they're not all insured under the same policy. So we tend to say the liability the number of horses on that premises should be declared, and that'll include your own personal horses. And generally, that insurance would cover them when they're out competing and off-site and being hacked for your own personal use. It also means when your employees are handling them, you know that they're covered for liability, or employees are riding them, you've got the public liability, so it's all in one place and covered under one policy. So it's really important, you know, that your insurance is aware of all the activities and all the horses on site. There's no benefit to not declaring any of your private horses or any private activities, and that can include even any non-equestrian activities that you do on your premises, even if you know you've got a barn that you use for storage or something like that, commercially, or you've got an office on site. You still need to be letting your insurance company know, because that could have an effect on your insurance, and it's better to make us aware than not, because at the time of a claim that could cause problems.
Okay, that's useful information. Kathryn, Kath touched earlier on risk assessments and so on when it comes to employing people, but when it comes to business related records, so for sort of finances, what would your top tip be for yard owners when they need to be considering that area of running the yard?
Ensure the bookkeeping is done up to date. Make sure you sort of put some time aside once a week. Ensure that you always keep your receipts, because that's another thing. As I said before, never pay anybody cash in hand, because HMRC will look at it where you paid them in cash in hand, so where did you get the cash from? It will also be, and make sure that all your staff have got employment contracts. And also another thing which I think a few people don't do is ensure that your liveries have contracts also, because that is important, because each contract, it's your agreement and their agreement. If they don't read it, that's up to them. Appreciate running a livery yard is a full-time job plus some, but doing the paperwork gets overlooked, but it sometimes is the most important thing of a business. Ensure that you also keep a copy of the horses' passport, make sure they're all up to date with their inoculations, and I always ask for a copy of their insurance, because some people say, yes, I'm insured. I did have one who said, yes, I'm insured, and unfortunately they weren't.
Yes, paperwork. I'm very stringent about paperwork. Again, actually, on the Yard Owner Hub, there's lots of resources on there about different paperwork and procedures that people should have for new liveries coming in and client management, that I always think you're better to have too much stuff than have not enough stuff, and have gone to too much effort than find out that actually you don't have something vital when you need it. Don't worry, everyone, we're heading towards the end now. I'm conscious that we've run over quite a bit because we've been trying to give lots of information, and blame Catherine. And I've been trying to fit in the questions as we go along, so we've not got much longer to go. So back over to Kath. Again, Catherine's just been touching on the record keeping. Obviously, that must play a part when it comes to insurance as well, like you've already touched on about defending claims and so on.
Yeah, absolutely. And yeah, on that part, with the claim side, record if there are incidents on your premises, keeping a record of that is so important. Circumstances of the incident, who was involved, what injuries occurred, what medical treatment was given, who gave the treatment, and contact details and statements of any witnesses. So obviously, if there has been any bodily injury, your insurance company needs to be made aware. And then, even if there wasn't a serious injury, then it's still, any incident should be recorded. And then from a kind of record keeping point of view, currently third parties can claim up to 3 years after an injury or illness manifests itself. But with children, that's 3 years after they turned 18. So, the potential for that is there's a long time down the line you could have a claim come in. So it's really important that those sort of records are kept to cover those timescales. And with incidents, again, if you report them to the insurers as soon as possible, because they will generally investigate straight away, and that's really important for making sure that the information is as fresh in everybody's minds as possible. You might need to report any incidents to RIDDOR, so that's important to check that out, whether you'd need to do that if there was an incident. And yeah, so anytime an injury occurs on your premises, there is a potential of claim. So record being kept around the incident and risk assessments would be fundamental in defending that claim. So I know I've said it a few times before, but it really, really does make the difference at that time.
Okay, and as Amanda's just said in the chat as well, when you've got outside people coming in that are providing services, so it might be instructors, coaches, freelance grooms, it's really good to ask for a copy of their insurance as well, which again is something that I know that we've covered in our other insurance ones, is definitely a positive thing to have a copy of. So where have I got to? Catherine, so when it comes to a yard reviewing their business procedures, such as their finances, client management, tax status, and so on, how often should yards be giving a bit of a business review to themselves?
I would recommend that they do look at their finances on a monthly basis. Just look at your income and expenditure and your cash flow, because again, as we've touched on beforehand, the cash flow is required. And also, if you've done a budget, you can then compare the budget with the actual on a monthly basis, which is quite interesting. Even if you do it for 6 months, just as a try, just give it a go. It's also worth looking every quarter, so that's 3 months, evaluating your business. So that's including staffing, services, etc. Because again, looking at it quarterly, you could say, well, we've lost a number of liveries, so we don't need as many staff, or we're going not all full liveries, we're going to go down some as part, and again, we need to reduce the staffing. So, and also you then might want to look at, well, this service isn't making us anything, well, we can try this service. The more you review your business, the better it could be. Annually, again, you've got your financial accounts, but which are being done. So again, you can then look at, once you're done your year end, you can then look at planning for the next year for your budget. Then again, you can look at ad hoc reviews throughout the year, just in case the regulations change, making tax digital, changes in the market conditions, and just remember to yourself that running a business is not a 5-minute thing. It is hard work, and I think we all can appreciate that, the hard work. And that's why I sort of say at the very beginning, make sure that you've got your advisors that you can talk to, because that is a really important thing.
Okay, and Kath, I suppose it comes down to the same when people are shopping around for reviewing their insurance and so on and so forth, and that it's really important if they change things for their business that they equally let their insurers know, because that can obviously have an effect on outcomes or claims or policy costs and so on.
Yeah, absolutely. I mean, insurance is one of those things that you hope you never need, but when you need it, you want it to be there to fully protect you. And I think that's the thing. I think it's very easy to try and cut costs, go for the cheapest, and that isn't always going to give you the right protection. The way claims are handled and things like that, you want to be going with a reputable company who understands the business that you're insuring, and ultimately you want to be speaking to horsey people who, when you talk about lunging and things like that, are going to understand what you're talking about. And we're seeing it more and more that businesses are evolving and changing and diversifying to help combat rising costs, hiring out arenas, putting on shows, offering more services, whatever it might be. But those sort of changes can affect your insurance. Often, the more you're doing, there's more charge that's going to be made from an insurance point of view. So it's really important to let your insurance company know and discuss that with them. Just because you have insurance doesn't mean you're covered for everything. So yeah, anything like that, you need to consider and look at your limits of indemnity that you have for public liability. Often you have 2 million, 5 million, 10 million. Look at what your business is doing and what the potential exposure is. And if you're speaking to a reputable company, they'll be able to sort of help you and guide you along the way.
Okay, great. Right. Woo, we're at the end. Obviously in the last bit, I'll just add on, I know I keep talking about the hub, but for people that aren't familiar with it, it's completely free. You don't even need to log in or anything. It's all just there to be used, and it's from lots and lots of different things. Like there's lots of insurance things from SCIB, and there's some bits from Catherine on there, and from lots of other equestrian organisations, and it's all about helping you understand the best way to run your business. So for admin, like we've covered this evening, it's obviously super useful. There's all sorts of things on there, and there'll be a link on the email to that, and which Kath is just going to tell you about. So from me, thank you to everybody. We don't need to do a Q&A because I've managed to slip them all in, which I apologise means we've run over a little bit, but now we don't have to do a Q&A, so swings and roundabouts. So yeah, so from me, thank you to everybody for spending your evening with us waffling on.
Thank you very much, everybody. Hope you're still awake.
Yeah, thank you, and thank you to those that are still have hung on till the end. So yeah, over the next couple of days you'll receive some useful follow-up guidance from the team, and it will include the recording of this webinar, so keep an eye out for those, and the emails will also contain all of our contact details, so should you need any further support, then you'll know how to get in contact. So just, SCIB can help you with all things insurance. So please give us a call if there's anything we can help you with. And thanks again. Good night, everyone.